this. Use this one. So this is what you have on weekly. Currently, you have what looks like a trendline break on the weekly, so on that weekly time frame. But we'll have to wait until tomorrow and see how tomorrow's candle is gonna close, how this week is gonna close. So if this trend line is solidly broken by tomorrow, by the end of tomorrow, might say price we'll be looking for trades going up on this demand zone here. But we'll talk about that now. So this trend line is broken. We still have to wait and see if it's gonna close below the trend line. If it closes below, we're gonna wait for retracement on this zone. This is all we have on weekly. 1, 2, 3, 4, 5. So this is weekly. Now with the curve, weekly curve now. Weekly curve is from here to here. That's your weekly curve. If it pulls back to this price here, it will be at zero. If it pulls back to this price, that's what obviously you're not gonna be using this this will be your take profits. This is where you're gonna close your trades. But the curve is on weeklies from here to there. Okay, it can turn here and go down, but it's one change that the curve is this. So now it's easier. Okay, should have started. Sorry. Currently, I think where is it? It's just at 25 on weekly on the weekly curve around 25%. Retracement to this will be at 0%. So that's a trading opportunity there going up. Then have to move this. So this is daily. So we'll focus on this range here when we go down to daily. Start from what we have this side. Um, We had a trend here which was not going to be a good trend because of that wick. And another one. But if you mark these as CPs because there is no drop, this is a rally base. Rally 1, rally base, rally 2, rally base, rally 3. Can connect an aggressive trend line here. It's a swing. Currently the zone in control on daily. And well, with this, there's something that we had here, which was this. This gap. This is taken out here by that base. I included this one as part of the basing. These two. If you look at the body of this, if you look at the entire range of the candle, from this wick to the highest wick, it's about 999. That's 100 pips. It's 100 pips. So the body should be 50 pips. So it's just 50, 48. So if this is 100 pips and this is 48, then it means this is the body is 50% of the entire range. So this whole thing is one base, and that was reacting to it. Both these candles are less. This one is less than 50, and this is less than 50. The rally base rally responsible for removing this gap. The 31 zone was retested here. With another trend line going up, which has been taken out. But unfortunately, we can't mark any zone here because it's reacting to a previous one. Now we have a new trend on daily. Can be if price is really gonna close above that, I mean below that weekly zone, we might be seeing a retracement going down to the weekly zone where we're gonna be looking for our interest going up. So now we talk about entries now on these zones on this because now we're gonna be looking for trades. So you said the first thing that you want to do is you want to know if you're high or you're low in the curve. Now this is the daily curve. Okay, this is not the daily curve because this is a CP and the trend line has been broken. So look for another swing to find the curve. But you can see that currently it's high on the daily curve. It's high on the daily curve because this is a swing. It has been tested once, twice. This is a third retest of that zone. It's still maintaining fourth, in fact. It's a fourth retest. But it's still maintaining it. It's still holding. It is the swing. This is 100% of the curve. Okay, this is 100% of the curve. It is coming from that 100%. So you'll have to look for the next swing where we can find our zero. So we have we had a trend line. We had a trend line here. This, this. This is taken out by this, 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 this. This is also part of the base. Look, I think it is this one. Taken out by this rally base rally. That's a CP. The trend line has been broken, so this can be part of the curve. Can't be used as part of the curve. And a trend. So it's taken out by this. But this is, you do not need to know the daily curve because this is your execution time frame. This should be your execution time frame. So you can use your execution time frame as your curve time frame. You can find these zones unless if you're going to be executing on H4, then you will need to know the daily curve. But if your execution is on daily, then you can use daily as also as curve time frame. Curve time frame and your enter time frame should be different. All these zones are daily zones 1, 2, 3, 4, 5. Should be daily. Okay, so now we want to know, say the first thing that you want to know if you want to take a trade is one, what is the zone in control? Zone in control is a demand zone, a monthly demand zone. Two, you want to know the curve. This is low in the curve, this is high in the curve. We are not even midway of the curve. Okay, but we are just close at 50% of the curve, but we do have a high time frame zone supply. High time frame zone supply zone that is close to okay, but now we have a little retracement which can still give us opportunities to trade going up. Um, but we do know that's the direction that we want to trade on is up. Okay, we do not want to sell, we want to trade going up because it's showing us that it is going up. Now we need to determine where are we going to take our trades. Obviously, we're not going to be using weekly for our executions. That's too much risk unless if you have the patience to hold. You can also check the curve on weekly. Check the weekly curve. This is our weekly curve. So as price is going up, obviously it is going to pull back. It's not just going to go up straight until it reaches our target. Same as here when it was going down, it didn't just go down straight to take profit. Goes down, retrace, goes down, retrace, goes down, retrace until it reaches your target. Same as this, it's going up there, but it's going to go up, retrace, go up, retrace, go up until it reaches its intended target or create a new monthly supply zone. But for now, we have this long term uh, bullish uh, bias in mind. Weekly is showing signs of going up. Trendline, I mean, it's showing signs of retracing back to this. To this. If it closes bearish, if it closes below tomorrow, we might see a fall back to this demand zone where we'll be looking for our buy trades. And we know for sure that when price is here, it will be low in the curve when it is here. Okay, so when it reaches this will be low in the curve, which will allow us to look for trades going up on our execution time frame, which can be daily or H4. So the trades that we are looking for should be nested here on this higher time frame. If you're trading momentum and location trade, should be nested in a higher time frame zone. We cannot currently, if it closes like this, if it closes like this, then there is no way for us to buy on this daily CP. We have to wait for price to retrace all the way back to this weekly demand zone. We have to wait for price to reach this demand zone first before we buy. If you trade counter trends, you can look for scalps if it closes below. But I do not promote counter trades, counter trend trades going against the trend. But there is a strong possibility of price retracing all the way back to this daily. As I said, if it goes back to the trace here, it's going to break this daily demand zone. Moreover, this is a CP. The trend line has been broken, so there are very slim chances that price might retrace on this one. I'm not sure about this as a zone where price is currently. This one, I'm not sure about this as a zone. I don't think it took out anything this side. Oh, there's a gap. This might change everything. There's a gap here. So yeah, so this is a zone on daily where it's currently reacting. So I'm asking myself why the daily candle is reacting like this. Okay, so there's a daily demand here. The departure was not strong though. I think it's gonna break. This is a CP. I think it's gonna break it. It's just a matter of time and it breaks it because this trend line has been broken. This is a CP. If this is broken, then we know that it's gonna go down because we'll have the trend line broken at least one zone taken out. That's a downtrend. So chances are it's gonna go all the way down to that demand zone at the bottom. So we have this now as a new zone that we have just identified. So um, we say if we want to buy, we'll have to wait for price to reach this demand zone. Now, how are we going to buy on this demand zone? Because this is a weekly demand zone. We do not have any fresh nested zone here. We don't have any zone, a fresh zone that is nested here. So we'll use confirmation when it reaches here. Wait for a while because we don't have any existing zone. If you don't have any existing zone, you wait for a while. Unless if you say you have that patience of executing on weekly, of which it's gonna be very risky. This is close to 200 pips risk, 150 something pips. So I don't think can use that as a stop. Rather wait for new zones to form, be created here, or H4 zones. Maybe there is an H4 zone that is existing. But it's better if that H4 zone is nested in a daily zone. It might becomes much better. So again, we say we want to look for trades going up when price reaches this demand zone here, but provided that the weekly trend is going to be broken by the end of the week, and if we are sure that price the candle is closed below this, then we're going to look for a buy trade here on this demand zone. Can look for trades on daily, we can look for them on H4 as well, but should be here on this zone. Then we can look for nested zones inside that demand zone. Yeah, so now when you're looking for your trade, when you're looking for a trade, make sure that the zone that you're going to trade on, the zone that you're going to trade on, will have um will meet these requirements here. Will meet these requirements. This is a must for your tradability. This is, remember again, this is a checklist for zone qualification and tradability. So this is how you check if your zone is tradable. If price has created a new zone and you want to trade, let's say on daily, create a new zone here. Like for example, why can't we trade any of these zones here? Because none of them, when we are looking at the scoring, this is the key when you're looking for trade execution. Look at the level scoring. Okay. Firstly, this one here. Why can't we trade on this one? One, um, you have a weekly trend line broken. Though it's not solidly broken, but this retest is outside the weekly trend. This retest here, this touch, is outside the weekly trend. Okay, so you're actually uh, trading against what is happening on the higher time frame. Okay, so if you look at these points, I think there is a point that speaks about this negating factors, things that make you to negate a zone, opposing higher time frame zone and control. Okay, in this case, the zone and control in the higher time frame is a supply zone, but it's showing signs of going down. You see, with the trend. So if you trade, you must be with the trend of your higher time frames. You must see that it is going in the same direction as your higher time frame. But if your higher time frame is doing something like this, breaking the trend, then there's no way that you can go and trade on your lower time frame. Same as this one here at the bottom. Um, can you check the supply? Can you check the supply zone daily, which was from previous demand? If the demand zone is taken out, you can check it. You can use it. If the demand zone is taken out, then you'll have a new supply zone, but not necessarily that it will be where the demand zone was found. Look at the last base. Look at the last base that took it out. If this is a supply zone, if this is a demand zone here, if this is a demand zone, price can create a zone, can base here and drop, or maybe base inside like this and drop. This is the same price where you had this demand zone. But if this demand zone is taken out by this CP, you will have this CP at the same price where you had your demand zone. That's a flip zone. But it is not always the case that when you have a demand zone taken out, where that demand zone was, you have a new supply zone. Sometimes the supply zone is going to form here. Sometimes it's going to form here. Okay. So, now, again, you need to check with these points. Check if the zone that you want to trade on has a 2:1 imbalance. Check if it's consolidated away from the base. Check if it has removed an opposing zone. You check all these points. Is your zone fresh? For example, if you have a demand zone here, you can no longer trade on this demand zone because it's no longer fresh. Okay. Two, it's a CP and a trend line has been like this one and this one. You can't trade on these two zones because of this point here. If it's a CP zone, trend line must be intact. If it's no longer intact, then you do not trade on that zone. Once the trend line is broken, then you do not trade on the zone. But if it goes all the way down here, creates a new zone that is nested here, it's going to be a very high probability zone. Okay, check if if it is fresh, it must be a fresh zone. If it's original, it's not a must for a zone to be an original zone. Can be reacting to previous zone, but uh, and also tradable. But if it is original, then it's going to be high probability. If it's strong, if your departure is strong, then it's a good basing. But just by looking at this, you can see this didn't have a strong departure. This is less than 50%. This is less than 50% based. You don't have any strong departure here. Maybe after that base, then you have these two strong candles going up. I think they were retested here and it's reacted to them. But this one doesn't have any strong departure. So you check with all those points. So these two zones we cannot trade simply because we know that weekly has broken its trend. These are CP zones. Trend line is no longer intact, so we can't buy. We'll have to wait for a zone that is nested here. That's going to be a high probability zone because it falls under your positive factors if it is nested in a fresh higher time frame zone. This is a fresh higher time frame zone here. There is a fresh higher time frame zone that you can trade on. So if there's a daily zone that's going to form there, then that's going to be a high probability zone. Okay, I think it is after 7:30 now. So I think for okay, I don't think I understand your question. So before the current demand, there was a gap, which was a demand. Before the current demand, there was a gap, which was a demand on daily. Before the current demand, this one, which one? This one. There was a gap. Where is the gap? Maybe I don't have it on my broker. Maybe it's different brokers, but I'm not seeing a gap. I'm not seeing any gap. The differs with brokers now. Some brokers will show a gap. Maybe there is a gap, but this is not a gap if you're talking about this or this. I don't know. If you have a gap here on your broker, this one doesn't have a gap. If there's a gap here, then that would mean this would be you won't mark any zone again here. You won't mark another zone here because this would be a reaction to that gap if there is a gap. But for this one, there is no gap. So we'll stick to this one. You stick to what you see on your broker. So this one, it will be like this. Okay. Okay, thanks guys. I think we're gonna call it a night for today. Um, I recorded these two. Let me save the recording first.